Well, first and foremost, is just to make sure Africa's issues are on the top of the agenda. Because when you talk about climate change, Africa only accounts for no more than 3% of total emissions, but actually suffers disproportionately from the negative consequences. It loses $7 to $15 billion a year. And if the current trend continues, that's going to rise to $50 billion a year. But it's not getting the amount of financing that it needs. Africa needs roughly about $277 billion a year to tackle climate change, but it gets no more than $30 billion. So there's a big gap there. But most of what is needed there is really to adapt to climate change. It's not so much on mitigation, but it's about adapting to climate change. The other thing that I wanted to get out of most of this is actually how we tackle Africa's debt issues, because at the end of the day, you can't run up a hill if you're carrying a backpack of sand. And so you can't have development in which you have highly indebted countries. And so we have to make sure that African countries facing a lot of challenges in terms of climate, in terms of also conflict, also in terms of high inflation and strengthening fiscal space, that they have the space they need to be able to invest in education, health, water sanitation, girls' education, and all of those things. So debt, climate, for me, are a very, very, very important part of my conversation here this week.
And Dr. Adesina, I mean, part of that, I want to start with climate change maybe, because you have talked a lot about, in particular, the IMF special drawing rights and channeling more of those towards addressing climate change on the continent. Where is the progress on that? Did you make any progress this week while here in New York?
Well, actually, just to think about the special drawing rights of the IMF, when we started, everybody thought, well, SDRs were things you put on the balance sheet, essentially as reserve assets of central banks. But we felt that actually these assets were actually simply latent assets, that I was convinced that we can actually do better in terms of seeing how we can turn those into assets that can unlock a lot of capital through the multilateral development banks. And the model that we developed basically was, to say, okay, if you actually rechannel the SDRs to us as AAA rated financial institutions, that's actually a hybrid capital that we can use. And it's a perpetual thing that stays on our balance sheet. So we can actually leverage that 4 times. It can even go to 4 to 8 times. And so we're very delighted, myself and the president of Inter-American Development Bank. We worked together very collaboratively to solve some of the because there were some technical issues about what's the reserve asset status of it. And if you want to collect it back, how can you get it back? So we had to deal with some technical issues. We solved all those technical issues, and I was delighted that the IMF board actually approved $20 billion of SDRs to be rechanneled through the multilateral development banks as hybrid capital. Now the issue is how do we get that money out?
Yeah.
So to get all that money out,
how do you?
Yeah, exactly. We had to actually put together a group of 5. We need 5 SDR-rich countries that will agree to rechannel that through the African Development Bank and the Inter-American Development Bank. But also we have to make sure we have a group of others that are in Europe. For example, European countries can't do it because of restrictions by the European Central Bank on monetary policy outside of the EU. And so, but we set up a very nifty structure, which is called Liquidity Support Agreement, in which they can just essentially guarantee those that are giving it to you. Okay, that's still allowed. So that's where we are. We're making progress in terms of the countries. We're talking to them, and I'm hoping that by the time we do G20, we'll have gone a long way in making sure that's realized.
Long way, or will you actually have access to the funds?
Well, actually, the long way is to get access to the funds. So, which means there has to be agreement. It's not just easy. Just like I gave it to you, there are legal things they have to go through in their countries to make sure that gets done. So we know that President Lula, as the presidency of the G20, as I spoke at this event just yesterday, that the SDRs use, for hybrid capital and getting it out to us is top on the agenda for G20.
This is something that, we're deep in the weeds of international financial machinery here, and how the money gets reallocated.
This is what we like to do, educate the public.
This is something, I was at the EU Africa Summit 2.5 years ago when this idea was sort of advanced to a level where the reallocation would be able to happen. The political will was there from under Emmanuel Macron at the time. Is the political will still there to action this and to make sure that transmission happens as quickly as possible?
Now remember, there are 2 things we're talking about here. That is the one in which there was a request to make sure that some amount of money are actually given, through the IMF, through its Poverty Reduction and Growth Trust and Resilience and Sustainability Trust. So that's money that's being given to IMF. Yeah. That's a different thing. The one that I'm talking about, and that's going very well. I think they have probably the $100 billion they're looking for of SDR. The one we're looking for is how the SDRs gets rechanneled through the multilateral development bank, so we can actually leverage that. The thing is that when the money goes to IMF is very, very great. Kristalina, my sister, has been enormously helpful. But for us, it's a 1 to 4 thing. Every dollar becomes 4. It's good for you as a shareholder. It's good for the taxpayers, and you don't lose all the money. And so the progress has been made. This phenomenal progress has been made. But I think we just have to tie the knots and make sure the money actually comes home, and we can continue to do it. I'll just tell you one thing that I can do. I take the case of, RJ Bank, President of the World Bank, and I got together during the spring meeting, and we said, look, we still have 600 million Africans that don't have access to electricity. Right. That doesn't make any sense. You can't grow in the dark, you can't industrialize in the dark, and you cannot be competitive without electricity. So I said, we're going to have to deal with it. And so we both agreed, and we launched what's called Mission 300, which is to connect 300 million Africans to electricity by 2030. Now, universal access to electricity in Africa is going to require $190 billion per year. Now, here's where the SDR connection comes in. Mm-hmm. Because if you actually have $50 billion of SDRs, and you can leverage it at 4 times because it's a hybrid capital for you, that means that problem is solved once and for all. That is $200 billion at least to solve that problem. So that's the connection that we are trying to make. And President Lula, as president of the G20, he's also we've raised the issue also about he has something called the Global Alliance Against Poverty and Hunger. Okay, and so it's the same thing. You use this SDR as well. You unlock massive amount of capital to deal with all the things we say we have a pact of the future.
So do you think that within 6 months, 12 months, you have that capital that you can move forward?
I believe that we will, because I think that the most difficult part, we've gone over that. Okay. So it's a question now of how we're going to use it and how we can get it out. So I think so, yes, absolutely, yeah.
Well, one of the other things, I'm just curious about other parts of the world where you look to access, partnerships money. You guys have been working with the Arab Bank for Economic Development on some key projects. What can you tell us about further expansion there? We're also curious about, the relationship with China and money coming in from China. What can you tell us in those 2 aspects?
The Arab Bank for Economic Development in Africa is a very great partner of the African Development Bank, and we have joint projects that we do together. Will you do more? Oh, yeah, we will do more. And we work in education, in water, in sanitation, in agriculture, and infrastructure, and so on. And so they just celebrated their 50th anniversary. I was one of their keynote speakers to speak there. They've also invested in one of the things that we put up called the Alliance for Green Infrastructure in Africa, which is a vehicle that we just put together to mobilize $10 billion of private capital going into greening the infrastructure space, greening the green transport, green hydrogen, green ammonia, and also making sure that we can basically have climate resilient infrastructure all across Africa. So we have a lot together. We've done, together about almost $835 million of joint projects in the last 7 years, and we've put in $600 million into that. So we are great partners, and I look forward to us doing more together.
What about China? Yeah, which we know over the years we've talked about the investments China has done. Yeah. Some of it, they're concerned about their access certainly to raw materials, basic minerals, and so on. So what can you tell us on that front? Well,
I think China invests quite a lot in infrastructure in Africa, and people get to ask me a lot of questions about that. But the question really is that Africa's infrastructure gap is so massive. Africa needs at least $60 to $108 billion a year. Not to talk of even the challenges you have. You're doing the infrastructure, and all of a sudden you have all these cyclones and hurricanes and all these things that are happening. That's actually setting you back, right? And so, but I think that what has happened is on the infrastructure space, what I just know more generally is a lot being done by governments. And I don't think that infrastructure should always be carried by governments. I think you need to have a lot more private capital moving into infrastructure. Right. I think you have to make sure that the debt burdens from infrastructure are reduced. I also think it's very, very important to make sure that the infrastructure being done, in any case, should be infrastructure that you can recycle. In other words, governments, if you've actually taken a lot of loans to do infrastructure, why not just do asset recycling? Basically, just recycle that into private sector and then free up more capital to be able to do more. Right. And so that's how I look at it. And I think that for us at African Development Bank, in the last 7 years or so, we've put in more than $55 billion into Africa. We are the largest by far multilateral financial institution investing in infrastructure.
Right.
When you talk to international investors, Dr. Adesina, I know you were meeting with a few of them while you were here this week. I mean, what is their concern? Because we hear a lot about risk in investing potentially in a lot of these infrastructure projects that you're talking about. I mean, what is it that international investors are hoping to see in order to penetrate more into more of these markets?
Yeah, if you take a look at it, we don't get that much of private capital moving into infrastructure, right, in Africa. But the issue is, people talk about risk. Well, life is about risk return. People forget about the return part of that. And so it's a risk-return world. And I take a look at Africa, and I don't think Africa is riskier than any other part of the world. Don't believe me, just believe the data. There was an assessment that was done by Moody's Analytics, who looked at the cumulative losses on infrastructure financing globally, not just in Africa. And what did they find? They look at 14 years of non-performing loans and debt, and they found that in Africa, the non-performing loans was 1.9%. In North America, it was 6.6%. In Latin America, it was about 10%, and in Eastern Europe, about 12.4%, and Western Asia almost 4.5%. So Africa is not as risky as people say. Perception is not reality.
How do we change that perception? Because I think you've got this really smart global audience right now, and I think we think of emerging world and we think, oh yeah, Africa. What's the message you would like to get out to the audience who's listening right now?
Well, first and foremost is that the fact that I said it's about risk return, well, doesn't mean there are no risks. Right. So first and foremost, that we have the vehicles to de-risk those things. So we have project risk, market risk, and whether there are also political risk insurance that we can actually provide. In fact, the African development.
Some say we have a little political risk too, but go ahead. Continue.
But we can de-risk that. So I'll stay within my lane. But we're trying to put all of our instruments, so partial risk guarantee instruments, partial credit guarantee instruments that we do for counterparties, whether government or private sector. We're trying to pull all that together into what we call an African insurance and guarantee agency. So private sector needing those risk instruments don't have to run in everywhere to lower their transaction costs to do it. And that will be a game changer, because it will also provide insurance against equity investments. It will provide insurance for you when you actually also have political insurance, and insure you against climate shocks. And the last thing I'll say about this particular thing is just that when investors are looking to invest, they're asking the question, where are the bankable projects? Right? You have to be able to have a whole series of bankable projects. And we're doing very well on that. We have, for example, an institution that I actually chair its board. It's called Africa 50. It's a private equity vehicle that has about now $1.1 billion and portfolios of $8 billion on infrastructure assets. Wow. And basically what it does is, it's as a part of a company, it's called Project Development Company. And so it develops bankable projects that it can sell, right? It doesn't matter what it is. So we're trying to make project development a business issue, not just a development issue.
It's the financial, the private sector involvement, right?
That's right. And the last thing I'll just say about investing in infrastructure, it's the importance of local currency financing. We talk about debt just now, but if you actually look at the assets that people are investing in, the revenue streams are going to be coming in local currencies, and the currencies are actually depreciating very much. So local currency bonds are going to be very important for financing that, and also synthetic local currency instruments are going to be there, and as well as, we at the bank, we support financial institutions in Africa that actually lend in local currency, but we actually insure you. We give you the risk. You lend it, and we bear the risk ourselves. Right.
We're seeing a lot of that volatility with currencies all over the continent. Dr. Adesina, we were just talking briefly about how this is your last UNGA as president of the African Development Bank. I wonder how you think about your time in office over the past decade or so. You talked about how the bank looks a lot differently than how you inherited it. I mean, how would you assess it?
Well, first and foremost, it's the greatest honor of my life to be asked by shareholders. We've got 81 shareholders to go, and actually you have the resources, you have the confidence, you have the support, and guess what? Go change the continent of my birth. And that's not for me a job, that is a mission. I take it as a mission. And so that's how I look at it every single day. Now look at what has happened to the bank since we actually started. For example, when we started, I said that we have to have a clarity about how the bank tackles issues, day-to-day issues of people. People shouldn't really looking at, you have African Development Bank. The issue for me is not just the bank. We know how to run the bank. It's the issue is the development part, right? And so we actually set out to actually say 5 priorities for Africa: light up and power Africa, universal access to electricity, feed Africa, integrate Africa infrastructure-wise, industrialize Africa so Africa can be competitive with global value chains, okay, and increase its share of global manufacturing. And then, of course, improve the quality of life of the people of Africa, the things that we all care about: water, sanitation, education, skills, jobs for young people, and all of that. So we, in the last since the last 7 years, that work has impacted on more than 400 million people. And second is what we've done in terms of raising more capital for the bank. When I was elected president first at the bank, my first term, the capital of the bank was $93 billion. Today, the capital of the bank is $318 billion.
It's a big difference.
And last year, just one point, last year, the African Development Bank was ranked as the best multilateral financial institution in the world. And last year and this year, we were ranked also as the most transparent financial institution in the world. So I think that, we've done pretty well. I think my staff have been fantastic, but most importantly, my shareholders have just been phenomenal. When I was reelected, with 100% of the votes, so which was fantastic.
Well, it's certainly a part of the world that we focus on so much. Jen knows this as she spends so much time on it as well. Dr. Adesina, thank you so much.